Everyone in crypto seems to agree on almost nothing right now, except Hyperliquid. If you look around CT, funds, traders, and even a lot of maxis, Hype is the one altcoin that everyone seems to love. So the real question is why? Why is Hyperliquid different from the thousands of other DeFi tokens? And more importantly, is the hype actually justified, or are people ignoring some pretty big risks? Before we get more into what Hyperliquid actually is and trying to answer some of these questions, we're super excited to announce the Summit Asset Scanner. This will come with the Summit Trading View Indicator, the Summit Cloud, and here you can click between bullish and bearish trends through crypto, stocks, and commodities. You can look through daily and weekly timeframes, and if we look at crypto on the daily, we can see that most cryptos are in a bearish trend right now, as we would expect. If we go to bullish, we can see that Tron has flipped bullish 3 hours ago. We can see where something has flipped on the Summit Cloud over here, and Hyperliquid has been in a bullish trend on the Summit Cloud for 33 days. This is one of the reasons we're so interested in Hyperliquid. It's been a massive outlier in crypto. If we go here, this will take us over to TradingView, where you can see the Summit Cloud and look at whatever else you want to look at on the chart. For access to this, you can go to our website, which I'll leave a link to down below, and go to the indicator section. Like I said, this will come with the Summit Cloud TradingView indicator. Now, and without further ado, let's get back to the video. So what actually is Hyperliquid? Hyperliquid is essentially a decentralized perpetual future exchange, but it's built differently from most other DeFi platforms. Instead of running on Ethereum or another chain, Hyperliquid runs its own layer 1 blockchain designed specifically for trading. That allows it to do something that most decentralized exchanges struggle with, an on-chain order book that works like a centralized exchange. Most DeFi trading platforms use AMMs where liquidity comes from pools. Hyperliquid instead runs fully on-chain central limit order book, similar to Binance or Bybit. That means real order book depth, extremely fast execution, and transparent on-chain trades. And for traders, that's huge, because it means you get centralized exchange level trading performance without giving up custody of your assets. Hyperliquid also has one of the most aggressive value accrual models in DeFi. The protocol directs about 97% of trading fees to buy back Hype tokens from the market. So the flywheel looks like this: more traders, more trading fees, more buybacks, more demand for Hype. This is very different than a lot of DeFi tokens that capture almost no value, and that's why many investors compare Hyperliquid to something like GMX, but on a much larger scale. Hyperliquid didn't just launch and fade away, it actually became the dominant decentralized perpetual exchange. At times, it handled $300 to $600 billion in monthly trading volume, capturing more than 70% of the DeFi perpetual futures market. That kind of market share is extremely rare in crypto. Usually liquidity fragments across dozens of protocols, but in this case, Hyperliquid basically became the main on-chain derivatives venue. That volume matters because volume equals fees, and fees drive the Hype buyback engine. Now let's look at the thing that everyone watches closely: token unlocks. Hype has a maximum supply of about 1 billion tokens, with a large portion still locked under vesting schedules. For example, one unlock schedule in early 2026 released about 9.9 million tokens worth hundreds of millions of dollars. Unlocks matter because they increase the circulating supply, and when tokens unlock, especially for early contributors, the market always asks the same question: will they sell? Interestingly, Hyperliquid actually reduced some team unlock ambitions by about 90% in 2026 to reduce selling pressure and stabilize the market. Moves like that are one reason the community still feels confident. Another reason Hyperliquid has such strong support is simple: the product is actually good. Many traders say it feels closer to a centralized exchange experience than any other on-chain platform. You get fast execution, deep liquidity, real derivatives markets, but you can still keep self-custody. That combination has been a holy grail for DeFi for years. Hyperliquid is one of the first platforms where people feel like it actually works. That said, it's not perfect. Hyperliquid still faces some real risks. First, token unlock pressure over the next few years. Second, competition from other derivative protocols. And third, something people rarely talk about: if decentralized derivatives keep growing, regulators will almost certainly pay attention, and derivatives markets tend to attract the most scrutiny. So the reason everyone seems bullish on Hyperliquid is actually pretty simple. It combines 3 things crypto rarely get right at the same time: a product traders actually want, a token that captures real revenue, and a market that already dominates liquidity. That's a powerful combination. But just like every other crypto project, the real test isn't hype, it's whether the protocol keeps growing faster than the supply of its token. Now, we'll be watching all markets very closely. We'll be taking trades, and if you do want to see our entries, if you do want to talk to us about macro environments and all different types of markets, I'll leave a link to the free Discord down below. I'll also leave a link to our website down below where you can join the weekly watch list. We do weekly setups, we watch levels, and we give macro context every single Sunday. And one of our most important tools at Summit is the Summit Indicator. You can also get access to this here. This comes with the Summit Asset Scanner that we went through at the start of the video. It's super easy for everyone. You don't need to draw lines on charts. You can see clear trends, bull trends, bear trends on the Summit Cloud. Make investing as easy as you can for yourself. Check it out. And if you did like the video, please leave a like and subscribe.